I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher. I'm pegging Ethereum between 15 and 20,000. Solana between 750 and 1,000.
Solana's price experienced significant growth, primarily during the last 2 months of the previous year, surpassing the $100 threshold. However, it began to decline in early 2024. Although Solana occasionally traded above the $100 mark, its value has notably decreased and is now trading in the 90s as of February 2024. Solana stands out as one of the purported Ethereum killer blockchain projects, addressing issues like high gas fees and slower transactions. Distinguishing itself from other blockchain networks, Solana operates on a proof-of-history consensus mechanism, enabling a remarkable throughput of 50,000 transactions per second while upholding network security and scalability. Additionally, Solana boasts various applications such as Web3 gaming, NFTs, DeFi, and crypto income opportunities. Given the expanding network development and use cases, investing in Solana promises long-term benefits. The increasing popularity and adoption of blockchain, particularly with the emergence of new applications like blockchain gaming, have propelled Solana's price upward. Its distinctive features, including ultra-high TPS and low transaction fees, coupled with new use cases and institutional investments, have contributed to significant price surges in subsequent months. Notable crypto events such as the FTX crash and the extended crypto bear market also led Solana's value to plummet to $8.9 by the end of 2022. Nonetheless, Solana's price rebounded and witnessed substantial growth by the end of 2023. It's only a matter of time before Solana resumes its winning streak in the 2024 market. In today's video, we'll delve into Raoul Pal's perspective on Solana, anticipating it surpassing $1,000 by 2024. But before we proceed, ensure you subscribe to our channel and hit the bell icon for timely updates. Initially, people acknowledge the broken system and seek solutions. Some opt for gold, others for Bitcoin, while some explore alternative avenues. This sense is pervasive, observable in populism and market reactions, prompting the quest for solutions and the discovery of new use cases like NFTs for smart contracts, facilitating technology adoption akin to the internet. This rapid adoption, paralleled only by AI, underscores the foundational role of technology in addressing societal challenges. However, we also recognize central banks' devaluation of currency, diminishing its value over time. Consequently, individuals seek assets providing enduring value, counteracting the recurrent depreciation orchestrated by governments and central banks. This dual aspect, encompassing technological adoption and currency devaluation, underpins the cryptocurrency movement, shaping cryptocurrency prices. As evidenced by the exponential growth in active wallets, this movement is gaining momentum with projected astronomical growth rates, highlighting widespread adoption. The distinction lies in our role as users of the internet and mobile phones. While we didn't generate income from them, unless we owned specific stocks, the ownership of the internet infrastructure remained elusive. However, here, ownership is feasible through tokens. This allows us to engage in an unprecedented global infrastructure collectively built by humanity, of which we can possess a fraction. It marks the inception of a seamless global investment product, akin to Bitcoin, which retains its value across regions like India, Nigeria, and London. Unlike traditional assets such as Tesla shares or gold, accessible primarily through physical purchases, acquiring a wallet grants instant access to financial transactions worldwide. By owning tokens like Ethereum, one essentially possesses a coin, potentially leading to wealth accumulation as adoption increases. This represents one of the most significant wealth creation endeavors in history. The pressing need is for leadership to devise a new system, addressing the actions of central banks and governments, counteracting the challenges posed by excessive debt accumulation. The unchanging debt cycle, characterized by governments accumulating more debt to service previous debts, has exacerbated the situation by elevating interest rates, perpetuating the debt spiral. Despite the adverse consequences, authorities are incentivized to persist in this trajectory. The cryptocurrency bear market observed in 2022 mirrored broader trends driven by liquidity reduction due to inflation. Consequently, we find ourselves in a landscape where actual blockchain-based inflation measures around 1%. This 4% inflation rate has, therefore, decreased. Interest rates for growth are excessively high in this context at 52%. Consequently, it is highly probable that interest rates will decline. China is currently grappling with an economic crisis characterized by total debt deflation and compounded by factors such as an aging population and substantial debts. The situation necessitates increased stimulus measures, a trend likely to be mirrored in Europe and eventually the United States, driven by the imperative need for growth to offset interest costs. Consequently, there is a considerable likelihood that the value of our money will diminish. In other words, the unyielding debt cycle, coupled with the cryptocurrency bear market and prevailing inflation rates, has led to a landscape where interest rates for growth are exorbitant, necessitating stimulus measures to counter the economic downturn. This scenario, observed prominently in China, but with potential repercussions globally, signals a looming devaluation of currency values. Asset prices are poised to surge, creating a stark contrast with stagnant wages and posing a significant challenge for individuals. This scenario paints a grim picture of the future as we grapple with the struggle to afford assets, while also facing the need to refinance a substantial debt burden. Despite these challenges, the cryptocurrency landscape presents a predominantly favorable environment characterized by abundant liquidity. Cryptocurrencies have emerged as colossal absorbers of capital, driving seemingly insatiable demand and exponential growth. As a result, crypto has emerged as the frontrunner in this dynamic landscape, prompting individuals to allocate a substantial portion of their liquid assets to it since 2020. This isn't merely a passing interest. It reflects a deeply held conviction among investors. Moreover, the importance of contracts cannot be overstated in human existence, encompassing societal and religious frameworks. With global debt towering at 400% of global GDP, the significance of debt and its contractual nature becomes apparent. Assets pledged as collateral are dispersed among numerous claimants. As we transition into an increasingly digital era, the importance of digital assets becomes even more evident. This digital infrastructure facilitates seamless transactions and ownership verification. Heralding the dawn of the digital age, it underscores the importance of adapting to digital innovations and leveraging them to navigate the evolving financial landscape. In summary, while asset prices surge and wages stagnate, the cryptocurrency market presents opportunities for growth and investment, highlighting the significance of digital assets in the emerging digital age. This concludes today's discussion. We eagerly await your thoughts in the comments section below. Don't forget to show your support by liking this video before you leave. Thank you for watching.